$75,000 invested into a high-quality dividend growth style ETF like the Schwab US Dividend Equity ETF SCHD is in fact enough money to surpass your entire yearly salary just after a matter of several years. Now, I went over all the numbers, all the math, and in this video I'm going to share with you exactly how this is possible, so make sure to drop a like down below, subscribe, and let's get right into this one. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now, along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. So if you want this tracker and the ebook, go to the first link down below in my description and grab it today. So first off, the idea of investing a relatively small amount of money into a high-quality dividend growth ETF that has grown over time but also offered more and more in dividend income over the years is nothing new, and a lot of investors have been doing this for several years now. Now, the idea is that with an ETF that grows over time but also pays you more and more in income over the years, you're going to be able to compound a relatively even small portfolio to a massive one without having to invest hundreds of thousands of dollars or even millions of dollars or anything of the sorts. Now, this ETF's objective is pretty simple. It's to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index, which is an index comprised of around 100 different stocks that all made it through multiple different screenings, all paid dividends, and have paid more and more in dividends over time. The highlights of this fund are very simple, it's very tax efficient, it's low cost, and the fund can serve as part of the core or complement a diversified portfolio. So although SCHD is not the only ETF that an investor could invest a relatively small amount of money into, for this video's example, $75,000, and then surpass their salary later on, it's definitely a high quality ETF that has the potential to, and especially if you look at the historical performance, which doesn't indicate future performance, it definitely seems like it has a chance. Now, the average salary according to SoFi says that right now in the US it's $63,795 per year. So this in theory would be the amount of money that an investor would have to basically be bringing in, more or less, hopefully more of course, in order to have their dividend income alone surpass their entire salary, which at that point the investor would be potentially financially free, not have to work anymore, or if nothing else, at least work as they please. But before I go through the math and share with you guys how long it would take for an investor with just $75,000 invested to surpass the amount of their entire salary on average, which like we saw was around $63,000 to $64,000 per year. Looking at some more of SCHD's performance over time, the ETF, like I said, has grown consistently over the years. As far as price return goes, 239% it's grown. Now for this video's example, we're really going to be looking at dividend income because again, we're looking at how long it would take a $75,000 investment to generate enough dividend income consistently in order to surpass their salary and maybe retire even early. But still, having your underlying investment grow over time, having your net worth go up, is sort of just a bonus on top. Now, to get into the important part, especially for the context of this video, dividends, dividend growth, etc., etc. The current dividend yield trailing 12 month for SCHD as of filming this video is around 3.4%. The dividend growth rate trailing 12 months is around 12%. Now, more importantly, over the last 10 or so years, because we do want to really have an idea over time, is around 11% consistently. Now, this means that year over year, sometimes more than others, SCHD ETF has been raising their dividends consistently somewhere around 11%. That means that in theory you're getting an 11% raise year after year, which is not only enough to keep up with inflation, at least hopefully, but probably more than enough of an increase to outpace inflation and give yourself a little bit of a bonus on top. Now, like we mentioned earlier in the video, this is also going to be very, very helpful to compound a portfolio, especially if you reinvest these ever-growing dividends into more shares of SCHD up until the time that you're ready to pull the plug and retire. Now, I think we did enough of the overview. Let's get into the actual numbers and share with you guys how long it would take, and if it's possible, for a $75,000 initial investment into something like SCHD to be able to surpass your yearly salary. Let's take a look. So a $75,000 initial starting principal investment, $0 annual contribution from there. So for this example, we're looking at a $75,000 investment day one, and then not a single dollar contributed from your outside money from then on forward. Now, because SCHD has around a 3.4% initial annual dividend yield, somewhere around there, an 11% expected annual dividend amount increase. Again, all these numbers can be changed, all these numbers can be adjusted. I'm just going off of some basic estimations. A 5% expected annual share price appreciation. We have a dividend tax rate of 15%. We have dividend reinvestment being turned on, which means all those dividends over the years, sometimes smaller, sometimes larger, are going to be reinvested into more shares of SCHD that are paid out quarterly. Now, we have this example for 30 years invested, but I'm telling you right now, it doesn't even take that long. So year number one, the $75,000 investment is going to earn an investor around $2,500 per year in dividends, not enough to retire off of, but that does give an investor a large amount of money to reinvest into more shares. Now, year number two, we're already up to $81,000 and almost $3,000 per year in dividends. By year number five, the portfolio is already over $100,000 $100,000 and almost $4,500 per year in dividends. By year number 10, $158,000 and $9,100 per year in dividends. Now remember, if an investor wanted to contribute annually more than $0 every single year, this is going to grow a lot faster, let's be real here. But for this example, I wanted to kind of go with an extreme and say, let's say an investor just said, here's 75K SCHD, lock it up, throw away the key, and tell me when it's time to retire. So for this example, 15 years in, this investor would have over $250K invested and almost $20,000 per year in dividends. Now, even though at this point, this investor couldn't retire necessarily off of 20K in dividends per year, $20,000 of extra income is probably going to be helpful for most people out there. Now, with this example, it probably takes somewhere around 21 to 22 years in order for an investor, in theory at least, to surpass their salary of around $64,000, $65,000 per year. And again, this could be a lot faster or slower depending on how much money an investor initially starts out with, etc. But as you can see, there's sort of a specific timeline where the dividends start to get much, much bigger a lot faster. And that's really the power of compounding, or the snowball effect, kicking in dramatically. Because as you can see, it starts off going up by maybe 6,000 per year. Then all of a sudden we have 8,000 per year. Then after just a few more years, you go from $68,000 per year to $83,000 per year. Now, this is another reason why a lot of investors always tell, especially younger investors, get your money invested as soon as possible and let the power of compound interest do its thing. Because generally speaking, the longer you're invested and the longer you let those dividends reinvest on top of each other, the more chance that you have of even a relatively small portfolio to be able to compound into a massive one over a short time frame, relatively speaking. Now, maybe you're saying, well, 22, 23 years is not a short time frame whatsoever. Who really wants to wait around 22 or 23 years to retire off dividends alone? And I would simply say, with just a $75,000 initial investment and then just reinvesting the dividends along the way, that's a very, very impressive short amount of time, considering you're not adding another single dollar of annual contribution from there. Like, for example, if an investor wanted to contribute an extra $12,000 per year or an extra $1,000 per month, for example, it would only take this investor now around 16 or 17 years in order to now surpass their salary with the dividend income alone. And if they wanted to contribute $24,000 per year or $2,000 per month, it would take an investor somewhere of around 14 or 15 years from the start in order to retire off the dividends alone. So it really has a lot to do with how much you start off with, how much you want to contribute, how much in the future is this ETF going to raise their dividend or maybe drop their dividend, and how much the initial dividend yield is when you start buying it, etc. But one thing's for certain, it doesn't take all that much money and all that much time in order for an investor to, at least in theory, surpass the average annual salary of $63,000 in dividends whatsoever. So now that we went through and I shared with and proved to you guys that it's relatively easy to surpass the average annual salary, which is $75,000 of initial principal into SCHD, I lastly, most importantly, want to hear from you down below. When it comes to building out a long-term position in your dividend portfolio, what's the number one stock and or ETF that you're focusing on that's going to help propel you through retirement later on in the future? Drop some of the ticker symbols in my comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.